Yes, the fuse has definitely been lit, and we've a little over 4 months to debate, discuss and decide on the future of the UK and the EU. While the British press have been stirring up public opinion over our membership of the EU for some time, the real issues have yet to be presented to the electorate. David Cameron firmly believes the UK's best position is within a reformed EU, and at the recent EU summit he had an agenda of 4 key points to get a better deal for Britain. Yes, the referendum will be a simple binary in or out question, as it was with the Scottish referendum in 2014, and a majority verdict will be enough. Once considered a tail risk, the risk of Brexit is certainly on the rise. Opinion polls do suggest the outcome is becoming closer. However, we would caution against reading too much into individual poll results, as recent history has taught us they can be a poor indicator. If we remain part of the EU, then we're likely to see some form of relief rally in the markets. However, if we vote to exit the EU, then a sharp sell-off would be anticipated. Longer-term effects of an exit are harder to quantify, as it will lead to years of uncertainty. The effects are likely to be large and powerful and painful in economic, fiscal and political terms for both the UK and the EU. The risk to economic growth is keenest, with almost 50% of UK exports going to the EU. The uncertainty around Brexit adds to the view that the Bank of England will not be in a hurry to hike rates, which has seen markets push the chance of an interest rate rise in the UK out to 2019. How this will affect markets is more difficult to forecast, and like any prudent business, we are keeping a watchful eye and a steady hand. In the most simple terms, as the EU is our largest trading partner, it makes sense to want them to be strong. If we have to leave the EU, that would make the EU weaker, which is not great from the perspective of a trade partner. By remaining in the EU, we make the EU stronger, which is then good for the UK.